Mike PeQueen, you're from Las Vegas, and Vegas was a leading indicator of the housing collapse back in 2007 and the economic collapse. What does the Las Vegas economy look like now?
You know, there's been an enormous bounce off the bottom, but we've still got a long way to go. 2 years ago, 70% of the people were upside down in their mortgages. That number's half that, but that's still about 35 or 38%. We've seen prices double-digit increases for the last 2 years. A lot of speculative investment come back in there. So we're not at bubble levels, but we've seen a lot of interest in the housing market just because it was so well known how low the prices went.
And what about employment? Is it higher, lower than the national average, or people finding work?
You know, we remain at the very high end of the national scale of unemployment. We were in the low double digits and now we're about 8.9%. Still very high by historical standards, but a breath of fresh air considering where we've been in the last few years.
And are those people finding jobs at the casinos? Because they've also bounced off the bottom. So if there's people out there interested in buying stock in the casinos, what are you seeing firsthand?
Well, we're seeing that several of the major casino companies make a great deal of revenue now from Macau, so they have greater cash positions in order to be able to reinvest in Las Vegas. We've seen some new projects taken on by a Malaysian company, Genting, to come in and buy a project and restart it on the Strip. So there's a lot of interest in development. There's also the new project with Giada De Laurentiis' restaurant on the Strip. So we're seeing buildings that were stalled come back and restart. So the mood is very much an optimistic one, but still a long way to go.
And not just are you a Las Vegas resident, you're a financial advisor out there. So what can you extrapolate from the Las Vegas economy about the national economy now, and how are you advising your clients to invest knowing what you know?
Well, I think we've all learned a couple of things. First of all, that the liquidity of the stock market is a great thing compared to the relative illiquidity of the real estate market, and that even in a worst case scenario, what we saw in the stock market, prices did rebound. Many people's stock portfolios are now at a high water mark. Their home is probably not there yet. So there's a new appreciation in the stock market for how short the cycle is relative to real estate. And I think a more sophisticated view of the individual investor about risk. So I think there have been some tangible benefits from what we've been through. And I think that we'll continue to grow at a moderate pace in both the Las Vegas and the United States.
So are you telling your clients they should gamble on stocks, or is it a safe bet?
I don't think we'd say gamble. I think we'd say moderate, always a balanced portfolio. We're very much in the blue chip mode, but I think that you can't go wrong over the next decade or so with a good balanced portfolio.
Thanks a lot, Mike.
Thank you.
Thank you for watching The Street.